Welcome to Dorchester Advisors. Today, I want to talk about the financial markets in the first quarter of 2025 and my outlook for the coming months. I think you'll find some of these insights useful. In case we haven't met before, my name is Dushyant and I'm the founder and managing director of Dorchester Advisors. We help individuals and families build solid retirement portfolios that are capable of providing them with enough money to sustain their lifestyle through retirement. What happened in the first quarter of 2025? Well, except for US equities, the widely followed asset classes, cash, bonds, stocks, real estate, commodities, pretty much the entire investable universe available to professional investors. Well, these were up in Q1 except US stocks. The notable positive performance actually came from non-US stocks, which were up 7% on the EFA index, and commodities, which were up 8.9%. This shows why sensibly diversified portfolios are so important in the long term. Of course, the first week of April upended all these trends as the financial markets reacted so negatively to the tariff wars. So if the most significant event of the fourth quarter of last year for Americans was the US election, then surely the main event for them in quarter one of 2025 was the start of the tariff war. Now, the year started with promise. The investors liked the plans of the new administration and the stock market reflected that. But then around mid-February started a decline that kept accelerating as the quarter went on, culminating in some deep turmoil early April. The reaction to the tariff wars by the financial markets, by investors, was clearly very negative. And now analysts, investors, CEOs are all trying to figure out the extent of the damage being caused and how to deal with it. So what's our outlook for 2025? First of all, we have already benefited from two very strong years, 2023, 2024. During these boom times, so many economists cautioned these good times won't last, that a recession is due, that the stock market is due for a correction. Well, perhaps some negative period is upon us. Perfectly normal. It happens. But I don't see this as a serious cause of concern, especially for our clients who have implemented defensible investment plans, which are designed to withstand poor markets. And nor do I plan to make any significant changes to portfolios when things settle down. To trade when the markets are in turmoil is usually not an effective investment strategy. It is tantamount to market timing, which doesn't work. So while it's emotionally reassuring to get out of the market when things are bad and then plan to re-enter when things stabilize and settle down, this is an approach that simply does not work in reality. And this is not the first severe decline that I've participated in. Over my past 45 years or so as an investor, there have been numerous turbulent markets. In fact, in the past 18, the great financial crash and COVID. And with these experiences, I have learned to operate in such markets. Simply put, I am comfortable we can navigate through the coming months. Rather than focus on short-term imponderables, which this haphazard tariff war is causing and creating, our investment philosophy for high net worth individuals with long-term horizons remains steadfast. Diversify your portfolio sensibly over all the main asset classes. Keep a bias towards equity, weathering the downturns as they occur. Keep a relentless focus on managing costs. I think this is a very feasible investment strategy to build assets and to ensure a comfortable retirement. Thank you for visiting with us. Thanks again for listening in. I invite you to look through our website, and if our philosophy and approach resonate with you, give me a call. No obligations. I love talking everything investing. Thanks.